All right, so the infrastructure bill and also the Senate has maybe come up with a way to work into how do you deal with cryptocurrency and maybe digital assets in general. My name is Paul Barron. Welcome back to Tech Path. Joining me today, of course, is Lisa Francoeur, jumping back in here on the anchor desk.
You know how we do.
You kind of roll in and just say, hey,
I have a good time. I love what we do. Crypto markets never sleep, so.
Educate. That's the idea.
Edutain.
Let's talk about is this bad for the market? Is it bad for investors? Kind of just the whole framework. Kind of talk to me a little about what's happening, Lisa.
I mean, look, I think that the regulation is always going to inject a level of like skittishness into the marketplace.
Sure.
So we shouldn't expect, anything different. I think the thing about this bill, which is a little disconcerting, quite honestly, when you think about what the bill is designed to do, which is $1 trillion in infrastructure improvements across the country. But the fact that they would try to integrate some regulation into that mix with crypto and having crypto underwrite the cost.
You got to pay for it.
You got to pay. So, I mean, paying to play is never something that we enjoy in the crypto world. But the fact is that, and I quote, this legislative language does not redefine digital assets or cryptocurrency as a security for tax purposes, impugn on the privacy of individual crypto holders, or force non-brokers such as software developers and crypto miners to comply with the IRS reporting obligations, said a spokesperson, Drew Nierenberg. However, it's very concerning what the implications would be long-term. And it's just a proposal, but what are your thoughts on it, Paul?
Well, I think the scenario is, one, they're trying to get the infrastructure bill in place so that it kind of plays into the fact of they can carry in other legislative clauses into some of these bigger things, which always end up getting passed. Plus the Republicans are in on this, so that's going to help them get this passed.
Bipartisan.
So it'll be bipartisan. That in itself starts to wave in. Here's the thing I think that I'm concerned about is, even though they haven't really identified that digital assets, cryptocurrency as securities, could play well into the face of where the SEC is going with this, because the SEC is still trying to figure out how to deal with this. Obviously, Janet Yellen, put her gauntlet down and said, hey, do this. We need to know if we're going to regulate this through the SEC or the CFTC, either one. And then you had, of course, Senator Warren that kind of said, wait a minute, we're very pro this idea because of the unbanked. So I listened to the hearing, and what I was most intrigued with was the fact that, one, they were actually a little bit educated. They had done a little bit of homework here.
A smidgen, a smidgen.
So that in itself, I felt like was a pretty good thing. And then Warren kind of surprised me because, and I know she kind of goes with the underdog in the sense of, I won't call it work in America, but she does have that Bernie Sanders angle. She reaches a different type of consumer or retail investor in this particular case. But the one that she really kind of surprised me with was the unbanked idea of this. So just all of this in general of accepting crypto, what kind of regulation they're going to put on it to really kind of move in that place. So
one thing I'll add, though, is that this acknowledgement of the legitimacy and the validity of crypto is an indication that it's not going anywhere. And so for anyone who was, questioning whether or not crypto was going to disappear, I think that this is proof positive that it's not only being taken seriously, but to your point around the education and the uptick in sophistication as far as the drafting of the legislation, at the very least, for all of my crypto enthusiasts out there, you should take this as a sign of crypto's not going anywhere.
I was actually also kind of pleasantly surprised with the movement of the industry, because they were able to get in position and kind of say, hey, wait a minute, now we want to make sure that in the language you guys are understanding that there's quite a bit of difference here in the ecosystem, the marketplace. It's different than any other financial marketplace that might be out there. So they asked, Congress to reconsider the language in the Senate infrastructure bill, basically this thing, imminent threat to the industry, which would be, I think in general, where it is a scenario right now where crypto in general as a market, I feel is too big to fail.
Yep, agreed.
So, and I think that also, government has figured out, hey, wait a minute, there's a tax pool here.
Right. There's
Okay.
money to be made.
Yes. So because of all of that, and there's an opportunity for us to really kind of, one, help potentially the underserved citizens, which I think will be a huge thing. It's going to democratize a lot of where investing is going. Sure, there's going to be the big players that will continue, retail investment, obviously institutional finance, all that's going to still
Sure.
play into it. But I think it's a good thing. And I want to jump to the story here from CoinDesk. Basically, this was the updated infrastructure bill. So it does narrow in on the crypto reporting requirement, which I thought was interesting. I wanted to highlight this section right here, Lisa.
Yeah, an updated version of the U.S. Senate's bipartisan infrastructure bill narrows the definition of broker.
Yeah.
So, Paul, for the purposes of crypto tax collection, but stops short of specifying that only companies that provide services for customers qualify. Now, one of the challenges I think with this bill is that there's a lot of gray area.
Yeah.
The level of specificity hasn't really given us clearly defined governance.
Right.
And as a result, when we have to sort of decipher legislation, that always leaves a lot of folks feeling unsettled. And with that, I think there's going to be revisions. I really love, and I'm ready to, when we get into Senator Rob Portman, a Republican out of Ohio, when we get into his stance, and his, he's one of the more crypto-friendly legislators. But I think that having opposition like that and having folks that understand how innovative the technology is,
Right.
it doesn't need to be or shouldn't be held back, because innovation and governance.
Right, exactly.
Do they go hand in hand?
Well, and their point here was that the earlier version of the bill was basically going to kind of pigeonhole the exchanges and some of the brokers,
Right.
So to speak, with a lot of these reporting requirements, which was going to be huge because the amount of reporting requirements that they would have had to do would slow down the trade
Right.
in a big way. So that just was almost impossible. That kind of led me to think that, wait a minute, so they don't really understand how fast these things work,
Sure.
how these exchanges truly kind of transact on a day in, day out basis. That was a little bit surprising to me, but the fact that they were able to pivot and update the bill and kind of address that situation, I think that was impressive. So I was,
You tip your hat off to them?
Yeah, I was like, okay, it's not there yet, listen. But this is also one of those things that, we just had a CEO of an exchange, Wazirix in India, on the show. And he and I got into a conversation that I thought is perfect for what we're dealing with here in the United States. And that is, if you think about this, when you're putting together laws and regulation, especially in these new frontiers, because if
Right.
you think about trying to regulate the internet, look at all the mess we're in right now.
Yep.
Because we wrote the electronic frontier.
Prematurely.
Yes, we wrote it too early, and no one really understood at that time. So I think what the good thing is that they're taking much more cautious steps.
Sure.
In this particular case, obviously because it's dealing with money now, and I think that in a sense is probably going to kind of set the U.S. government up for maybe a second, third round of regulatory updates that we'll see as this market starts to really kind of move to the next level.
I mean, I think that one thing no one can dispute is governance.
Yeah.
And it's just it's not a matter of if, it's a matter of when. And to see that the government is now recognizing that, to your point earlier, this is a huge tax base, and as a result, let's try to redeploy the funds being generated
Right.
from within this industry in a way that's leading to improvements that could impact all citizens. I love the altruistic nature of it all, but I do think that there's going to be an iterative process.
Yeah, yeah. All right, so one thing I wanted to point out here was the reporting requirements, because this was one of the key things that typically, when you look at reporting requirements right now, if you're going to the bank and you do a $10,000 transaction in cash,
Yep.
you're going to do an IRS reporting requirement statement. It's the same thing with this. Essentially, they'd have to report in additional information about some transactions, including those over 10,000. So if you're trading, every major trade is going to get a report to the
Right.
IRS. Right now, none of that is happening today. You have to do that at the end of the year when whether you're institutional or you're a big whale or those
Sure.
kind of things. So that I think is going to be worked into a lot of automation in the exchanges themselves, to where they'll just kind of build that into the ecosystem of how they run the infrastructure of the exchange, it's just going to like, boom, pop it out.
But, not to be a contrarian, but I also think it's important to note from the, what the industry, what the crypto industry is saying. And the Blockchain Association on Friday, Paul, posted an open letter saying what Congress is considering with this measure is not a new tax on the cryptocurrency industry. Instead, it puts new reporting requirements on individual players in the industry who have no way to comply.
Right, that was the whole issue that we've had many people on the show talking about that, to where it's kind of going down the rabbit hole and trying to, especially when you get into the decentralized products.
Exactly.
There's no real person involved. These are all decentralized mechanisms.
Exactly right.
This is what I think is throwing the curveball into the Senate, the House, and in general, is they don't understand. I don't think many people understand how true decentralization works.
Or what decentralization even means. Because, of course, when you're talking about centralized authorities, like it's, decentralization is their antithesis. But I will acknowledge the, one of the most vocal advocates in the space, Congressman
Portman.
And he was here in Miami at the Bitcoin conference. He's one of the most crypto-friendly legislatures out there. And I love the fact that he acknowledged how, here in the United States, we led the charge with respect to innovation. When you think about the Industrial Revolution, the internet, why would we try to stymie innovation in this regard? So that sentiment, I'm hoping, plays into the galvanization in Congress to give a lot more thought to how they're crafting legislation in relation to crypto. It shouldn't be something rushed. And then the last thing I'll add is that, if you have an opinion, if you have thoughts, write your legislators, like they serve us as citizens, and we should be helping them craft legislation that could benefit us all. That's my stance.
One thing, though, he did note, this was a piece over here on Bitcoin Mag, and this is basically him saying, I wanted to highlight the one in kind of that green highlight there. All right, so this legislative language does not force non-brokers, such as software developers, crypto miners, to comply with these obligations, this was a topic we had with the Tezos CEO and founder. He was in London. But his point was the same thing, because this is happening in Europe, is that this would flow through to the creators of a decentralized platform who have no control whatsoever of these kind of scenarios. So that was interesting. So it does clarify any person, entity acting as a broker by facilitating trades. This is going to be Coinbase, Robinhood, Binance, of course, all those guys.
I mean, I just think that the reporting on that is going to be so difficult. Like, this is, again, I think, a example of how
you think it will be?
I mean,
from Binance, I mean, they'll queue this up into an automated. Now, some of these exchanges.
I think it's going to be a headache, 100%. I mean, depending upon how many transactions you're conducting, and will this be a deterrent to the market?
Nah.
Will this? Oh, okay. Wow.
Nah, I feel no. I mean, because traditional markets already have these kind of measurements in place to a certain extent, all SEC regulated. Though.
Right.
This is a little different because this is moving into IRS
like
regulation.
Derivative territory, though.
Yes,
like now we're starting to move along the continuum towards a derivative level of governance, which again, when we talk about crypto and the decentralized nature of it all, governance, I don't know how that will work hand in hand, but I will say the onus is also on us to ensure that we are influencing the direction that things are going in.
Well, the good thing is legislators, in a statement on Monday, Toomey, legislator Toomey, Congress should not rush forward with a hastily designed tax reporting regime for cryptocurrency, especially without understanding it. So that was like one of the smartest things I've heard legislators say. Was like, hey, wait a minute, we don't even know what this is yet, so how can we tax it?
Agreed.
How do we sure, we're going to get your whether you're doing a 1099K, which is typically how these things come out of your exchanges right now, and those go into your tax form just like anything else. If you're a retail investor, obviously for institutional and more structured capital, quite a bit different in terms of how they do it. But I don't see this as being too bad overall.
Well, That may be
too bad.
Not too bad, but
Listen,
I will say
it could have been a lot worse. Is my point.
Agreed. But I wonder from the standpoint of like a startups, like how will this influence, again, going back to innovation, how will this influence the type of companies that are launching?
Yeah.
Will there be apprehension? Will they decide to move to another place in the world to launch?
Well, I don't know, because regulation, I feel like we need a certain amount of regulation to be able to leap to that next level of mass adoption.
Sure.
Okay? Because there's a lot of people sitting on the sidelines right now because one, they don't understand cryptocurrency. Two, they're worried that they're going to lose their life savings because they don't understand it. And because there's a lot of Wild West gunshot slingers out there.
Irregulated.
And nobody's in charge of it, kind of thing. So that is, I think once we kind of get at least a framework, I think that would be enough. What we have to watch out for in the crypto industry, I think, is the next layer, and really even the one after that. So I'm thinking after President Biden, and the next president is probably going to be the one that we have to really watch out for in terms of lobby action, which is something that the cryptocurrency industry, I think, is going to have to start really moving on, because we don't have a Facebook or a Google or an Amazon who can control their own lobbyist corps in Washington.
It's got to be a coalition, if you ask me.
You'd have to put Binance, Coinbase, you'd have to get them all on there, all the exchanges. Then you'd have to get all the major projects to really kind of go. I think that is the next layer, which is where you get into associations for DeFi, all those kind of things that really kind of play into it.
I actually think that that's a great takeaway from today's discussion, Paul, that the probability of a coalition working together to influence the legislators in a way where they understand, it just makes all the sense in the world. And I think that, I would be remiss if I didn't acknowledge that some of these banking institutions, financial institutions, had a hand in crafting some of this legislation. Speculative, yes.
They called their buddy. They called their buddy, for sure. Hey, man, what's up over there? I need to know how to write this bill.
Exactly. They're like, here's the bill. You're welcome.
How does this work? Well, let me see if that helps us. Kind of thing. Listen, there's a lot of backroom deals out there. You guys know that happens. It's in finance, so we're going to see a lot of those kind of tactics, from time to time. So it is what it is. The key is it's out in the open now. It's a lot different game than what it was 15 years ago. Now we're seeing trades in the traditional market that are much more equal what I think crypto is bringing to the market in terms of both institutional, retail investors, and just that level up ability, even if regulation to a certain extent, I think will have to apply to all involved. So
like I said,
that's the difference.
It's not a matter of if, it's a matter of when, but we want to keep you guys informed. We want you to know kind of the direction things are going in, and that's why we have these conversations, Paul.
Absolutely. All right, you guys are listening in over on the podcast right now. Make sure and leave us some stars over there. It's how we get your great feedback. And of course, if you're
on YouTube, we want to make sure that you subscribe, keep learning, or keep watching to keep learning, to keep earning. And of course, we want to hear what you have to say in the comments. What are your thoughts on this legislative move? How are you feeling about it? You like it? You don't? We want to know.
All right, you guys have an idea for a show, or maybe you have a topic you want us to cover, make sure and just hit us up. You can send a note over to producer@revernetworks.com or hit me up on Twitter @PaulBaron. Catch you next time right here on TechPath.